Wait and see. You know, when you can't predict the future, that can be a good strategy. But wait and see isn't always a good strategy when it comes to your retirement. In these uncertain times, the decisions you make today regarding your savings and investments can have a huge impact on your retirement. Phillip Statler and the team at Statler Financial have seen the market at its highs, its lows, and everywhere in between. They know how emotional it can be for you right now. So here's what they're doing. They're clearing their schedule to talk with you on the phone or on a video call to listen to what concerns you have and then offer help. The number to call is 863-285-3815. They are local and independent advisors who can help guide you through this. Call Phillip Statler and the Statler Financial team now. 863-285-3815 and schedule your time for a phone or a video meeting with the team. Call 863-285-3815. That's 863-285-3815. Investment advisory services offered through Statler Financial Services, Inc. Investing involves risk, including the potential loss of principal.
7 Light FM, Uncle Cracker's there. Morning Dave is here. It's 8:40, 20 here before 9. What the Sam Hill is going on with your retirement funds? Your IRA, your 401k, they all get affected by what we talk about here in the morning. Let's go down to someone who knows what he's talking about. Phillip Statler from Statler Financial Services, who is on the phone this morning. Phillip, good morning. How are you?
Good morning, Dave. Hey, doing well today. And it's halfway through the last week of February. It's just hard to believe that come Friday, that's going to be the end of February. It's just hard for me to fathom right now.
This month has just gone by way too fast for me so far. Yesterday, mixed bag on Wall Street, and it almost looks kind of normal, excepting NASDAQ. Dow was up by 15.5, Standard & Poor's up by a little under 5. NASDAQ was down by 67 and change, which is off, but nothing resembling the plummeting they've been taking. Kind of eventful during the day, though, because we were kind of looking like a greasy day about midday, weren't we?
Yeah, it was. It was a very, very down day for most of the day. I mean, every time I'd look at the futures, I mean, not the futures, but the indexes, they were soundly in the red. So I was pleasantly surprised that last hour when everything started moving back up, and we finished. It's a mixed bag, but believe me, the NASDAQ was down over 1.5%, almost 2% at one point. So to finish a half a point down was really a good thing.
Yeah, we'll take it over the alternative, that's for sure. Some of the stuff was a sigh of relief over the fact that Fed Chairman Paulson hauled up in front of Congress for his twice-a-year update on the economy. He had the Senate yesterday, and pretty much the Federal Reserve always does its level best to play things close to the vest, and he was pretty much saying all the things they expected, but as expected, too, the senators tried to draw him into conversations he didn't want to get into, like when Elizabeth Warren tried to get him to have a discussion that the problem with all our economy was the fact that income inequality was not a good thing. So she thought Paulson ought to do something about that, and he didn't take that bait and stayed pretty much on the monetary policy side. So might have been a sigh of relief from investors after yesterday in the Senate. Wouldn't you agree?
Yeah, I think so. We got one more day, though, of testimony today. I think he goes over to the House today, and we'll be talking to those folks and fielding some questions from them.
I like your misspeak on that better, talking to those fakes.
There are more.
Yeah, there's Freudian in there somewhere. The real bomb throwers are sometimes over in the House. So a little nervousness as to what they could corner the Federal Reserve into committing to off of that. Data-wise, most of the interesting data that comes out of the government comes out midday today. But yesterday afternoon, we got a consumer confidence reading that was kind of interesting. It was up substantially in February, up to 91.3 compared to what it was like 89 the month before, which all sounds good, but give everybody a point of relativity. Last year at this time, the consumer confidence index was about 170, so while we're getting better, it's nowhere near as good as it has been.
Yeah, it's not, and honestly, I don't think we'll see it get anywhere close to 170 this year. We just have too much further to go with COVID. What's that really going to do to the economy? How fast can we push through this and get back to some normalization? I think at this point, it's going to be the end of the year before we get enough vaccines out there that people are truly comfortable. Now, don't get me wrong, there's going to be people that are comfortable now, willing to go out and do some things, but the government still, in some states, is just locking people down.
Yep, we still got, and now the interesting part is we've got a Democratic administration saying we got to open the schools, and we've got the states saying no, we don't want to yet. And the teachers' unions arguing a third position on the thing, saying we just want to get in line first as far as the vaccine. It's the same old argument. We just kind of changed sides, didn't we?
Yeah, we did. That's kind of funny, isn't it? I mean, everybody threw rocks at the old administration because of the way they did it, and now they're throwing rocks at the new administration because of the way they're doing it.
It's basically changed players. The argument stays the same. They just sometimes change sides. Earnings season continues, and you've got some household names that reported this morning, don't you?
We do. We got quite a few, actually. We'll start off with Lowe's. They had a good quarter. They beat by 12 cents a share at $1.33. Revenue was ahead of forecast as well. And, one of their key indicators is same-store sales, and that was up 28.1%, which was about 6% better than expected. So they were trading up last time I looked. Yep, still up 1.7% this morning. Not close to their 52-week high, but at least trading up this morning.
I find it kind of interesting as their head-to-head warehouse competitor, Home Depot, got hammered yesterday and actually got the blame for a big chunk of the fact that the Dow was as flat as it was. And we both kind of figured it was because they wouldn't give guidance for the year ahead. Did Lowe's give any guidance, or they did something?
They did not. They did not give any guidance, no. So at least not that I see within the report I have right now.
Well, that's not fair. If I'm a Home Depot shareholder, I'm kind of going wah 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 right now, aren't I?
Exactly. So let's kind of keep with that same industry or go to the construction industry. Toll Brothers, they're a big construction company. They put in these massive subdivisions. They came in and they beat by about 30 cents a share at 76 cents. Their revenue was above forecast. They did raise their guidance on a lot of their key metrics. They said they got strong demand. Obviously, housing inventories are still real tight right now. And so they're trading, well, they've gone out to about even right now. They were up a little earlier, but now they're about even.
I'm starting to see a trend here. They were much better 25 minutes ago than they are now.
Exactly. So let's see. How about Six Flags? They reported they lost $1 a share, which was more than the 89 cents they were expected to lose. Revenue was well above estimates, though. So that was good. It's focusing on getting all their parks open in 2021, and so they think that they'll have a better year this year. They're up almost 3.5% this morning.
You can't do much worse than an amusement park company did last year, so it's got to be looking up, doesn't it?
Yeah, you take the amusement parks, the bars and restaurants, they're all kind of that same bunch there. Office Depot also reported it's called the ODP Inc. They're a holding company that owns Office Depot. They did fall a little short on their bottom line, and but their top line was okay. They came in at 55 cents versus 83 cents they were expected to come into, and revenue was a little bit above expectations. So they're trading down a little over 2.2% this morning.
All right, you got time for a couple more here. What do we got?
So we've got two really popular ones. Square, they became popular because they can take credit card payments via cell phone, basically. So they beat by 8 cents a share. They did come under some pressure, though. Revenue was ahead of expectations, but they came and said their growth rate is slowing down. They also announced that they had purchased $170 million of Bitcoin this last quarter. And so they are getting hurt from that slowdown, down about 4% this morning.
I heard about their Bitcoin purchase, and it was given some of the credit for kind of recovering Bitcoin this morning from after Janet Yellen talked it down.
Yeah, them and somebody else, I can't remember who it was also buying some Bitcoin. So the last one I have for you today is Intuit. Now, if Intuit doesn't sound really big to you, it's TurboTax, it's QuickBooks, it's all those guys.
Norton.
Yep, Norton Utility. So there's a lot of those companies. They came in, get this, 23 cents short of estimates. Yeah, a big miss. They came in at 68 cents. So that was a big miss for them. Revenue also fell a little shy of projections. They did give an upbeat current quarter, obviously because TurboTax, tax filing season. They expect things to bounce back, but they are getting hammered a little bit this morning, down 2.4%.
Ouch! Yeah, I would expect a security company with computer software to do well during a time that more people were working from home. I would imagine the analysts did too, huh?
Yeah. So that there's a little disappointment there.
Evidently. Resetting the table for the morning. It was the split vote yesterday. Dow up fractionally, S&P up fractionally, NASDAQ down, but not as bad as it had been. 45 minutes before trading happens this morning. Phillip, how are we doing so far with the futures?
Dave, we have made an about face to some pretty significant red numbers. The Dow is down 0.2%, $61. The S&P 500 is down 0.2%. That's about almost $7. And the NASDAQ's down about 0.6%. So everything has reversed course while you and I have been talking here for 10 minutes. We've got the same thing kind of on the commodity side. Silver's down 0.6%. Gold is down 0.75%. And then we've got crude oil going the wrong direction. It's up 0.5% to $61.95 a barrel.
That's leveled off a little. I had it over 62 on a delayed quote, which had me kind of going, oh, poop on that stuff. That's way too high to my taste.
Yeah, it is.
Yeah, it really is. World markets overseas, a little bit of an Asian rim sell-off. We had Hong Kong markets down 3% overnight last night. Not a good Asian rim day. European markets are up fractionally, not by a lot, but fractionally up during their midday period over in the European continent. Phillip, some people need to increase the amount of risk in their portfolio because there's an upside available to investing as well. Others need to control it. That all takes advice. How do I find you to get that advice?
That's right, Dave. There's only one thing folks can control, and that's the amount of risk in their portfolio. So that's why it's important that everybody know what their risk number is and what the risk number is of their current portfolio. Give us a call at 863-382-0037 to discover what your risk number is. And then catch us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730.
Hey, and back here again tomorrow morning, and we've got some building numbers to share tomorrow morning about this time. Phillip, thank you so much. We'll catch you then, all right?
All right, man, you have a great day.
Be well. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, I just wanted to thank you again for joining us today. I hope that things are going well for you. Remember, we are a resource for you. Anything financial that we can help you with. If you need help with looking to see how much risk you have, please give us a call, 863-382-0037. Have a great day. Hey, I look forward to talking to you again tomorrow. Bye now.